Welcome to Learn with Brain. Today we will discuss about accounting equation. We already discussed about accounting principles. In that we clarified about debit and credit rules. Okay. Today we will discuss accounting equation. So what is the accounting equation? Assets equal to liabilities plus equity. So it is the accounting equation. Assets equal to liabilities plus equity. Okay, so now we will discuss about debit and credit rules of the accounting equation. Okay, so first of all we will discuss about assets, debit and credit rules. So if asset increases, we will debit the asset. If asset decreases, we will credit the asset account. Okay, if asset if asset increases, we will debit the asset account. If asset decreases, we will credit the asset account. So now we will discuss about liabilities. If liabilities increases, we will credit liabilities account. If liabilities decrease, we will debit liabilities account. So equity also a liability. In the same way, if equity increases, we will credit with equity account. If equity decreases, we will debit equity account. Okay, now we will discuss about revenue account. If revenue account increases, we will credit. If revenue account decreases, we will debit. Okay, now we will discuss about expenses account. If expenses increase, we will debit the expenses account. If expenses decrease, we will credit the expenses account. So it is the accounting rules. So what is the accounting equation? Accounting equation is the assets equal to liabilities plus equity. Now we discussed about assets rule, liabilities rule, equity rule, revenues and expenses. Now we will discuss with examples. Okay, so before going to understand the examples, we know that debit always equal to credit. So debit equal to credit. Oh, if we see the balance sheet, left side we have liabilities. So what are the liabilities? Liabilities plus equity equal to assets. So it is the accounting equation. So now we will discuss about asset. So what are the assets? Cash, accounts receivable, inventory, allowance for doubtful accounts, prepaid expenses, investments, property, plant and equipment, accumulated depreciation, intangibles, accumulated amortization. So these are all the assets. So if assets, so these are the same accounting treatment. So what is the accounting treatment? If asset increases, debit the asset account. If asset decreases, credit the asset account. Okay, so it is the accounting treatment. Next, what is the accounting equation for liabilities? What are the liabilities? Accounts payable, notes payable, bonds, accrued expenses, deferred revenue, mortgage payable, loan payable. These are all the liabilities. What are the treatment for this type of liabilities? If liability increases, credit. If liability decreases, debit. Okay, next, equity. So what are the equities? Common stock, that means equity share capital, preferred stock, treasury stock, additional paid in capital, retained earnings. So these are the equities. What is the accounting treatment? Equity increases, credit. Equity decreases, debit. So now we will discuss about revenue. So what are the revenues? Sales revenue, realized gain, unrealized gain, interest income, miscellaneous income, extraordinary income. So these are all the revenues. What is the accounting treatment for these revenues? So if revenue increases, credit. If revenue decreases, debit the revenue account. Okay, now we will discuss about expenses account. So what are the expenses? Selling, general, administrative, interest, repairs, depreciation, amortization, meals and entertainment, office supplies, postage. So these are all the expenses. So what is the accounting treatment of expenses? Debit the expenses account if increases, credit the expenses account if decrease. Okay, now we will discuss about transactions. Okay, with J, with examples. Okay, our first one is purchase equipment with cash. Purchase equipment with cash. What is the J for purchase equipment with cash? The J is equipment account debit to cash account. Why equipment is debited? Equipment is a asset. Equipment is a asset. So that's why we have debited. Why debited? Equipment is a asset. It increases. It comes to the business. So it's a increases. Equipment account increases. That's why we have debited equipment account. Cash account. So cash account is a also a asset. Now cash account is decreases. So it is the outflow from business. So that's why cash account is decreases. As per the rule, we have credited cash account. Okay, so that is the accounting entry. Purchase equipment with cash. Equipment debited because equipment is a asset. It increases. That's why we have debited equipment account. Cash account is also asset. It decreases. That's why cash account is